This conference will now be recorded.
Hello, everyone. This is Landon Jones, the founder of Revisor. I'm here with a couple of brilliant young men on our investment management team. Ethan Dunbar, he is our Chief Investment Officer, and Nick Cargill, one of our investment analysts. Ethan's a CFA. Nick is right now working on level one of CFA, a couple of the smartest young men that I know. And what we're here to talk about today is our low volatility portfolio and a recent reconstitution that we employed. Basically, we made some changes to the portfolio. And Nick and Ethan are going to enlighten us on what took place, big picture, and just so you've got the information that you need in order to basically explain things to your clients that have questions about updates to the portfolio. Because as we know in the SMA world, there's transparency around the trading activity that goes on inside the portfolio, as opposed to in the ETF and mutual fund world when those positions are changed. The client base doesn't, really see those trades going on, and here they will. So this is your, overview so that you can answer questions for your client base. So Ethan and Nick, if you don't mind, I'll turn it over and just kind of give us the high level overview of what took place here and the trading activity that we did.
Yeah, absolutely. Thanks, Landon. To start, I think it's relevant to summarize what's been going on in the low volatility so far this year on a year-to-date basis, because it's part of what went into the decision making on the trades that were happening recently and are currently underway. The positive news is the portfolio has done phenomenally on it this year. This is what I have here is performance year to date, ending November. So basically January through November of 2023. And as you can see in aggregate, the portfolio has performed very well. So we're positive over 22% in aggregate on the portfolio, which is very strong compared to our relevant benchmarks. Our most relevant benchmark being this 100% equity blend down here, which is positive about 12% on the year. And the reason I mention all of that is because some of what we're trying to do here is trim back and get back in line with our overall asset allocation targets, because we have quite a bit of drift from the performance, especially the performance within large cap over the past 11 to 12 months. Just as an example, our large cap sleeve in the low volatility portfolio is positive nearly 50% on the year through November. And a lot of that is coming from some of the top stocks that we've owned in that portfolio that are now that have done phenomenally through this year and are now drifting quite a bit above their targets. So some of our goals here are to trim back those stocks that have had gains in the portfolio and get them back in line, so that we don't have so much drift in the portfolio. So that's an important element to what's been going on here, what is going on here. Just to summarize a little bit more thoroughly and get into the weeds a little bit more on some of the actual examples this year, our top performers being stocks like Nvidia, I'm sure everyone's heard of, Meta, Tesla, Amazon, Microsoft, Google, and Apple. And those are our best performers this year, and also are a very key part of the core portfolio and the top weightings of the portfolio. You can see here on the left, here's just the return, the percentage return for these stocks for the year. And on the right is a little snip from basically our top 10 holdings, showing how much weight we had in those holdings for the portfolio for this year. So that's an important element to the portfolio. So when we looked at revisiting the portfolio, reconstituting and adjusting the holdings, and actually then implementing the rebalance, that was one reason why we wanted to do this. When we went back into the portfolio, we did our typical, we implemented the process that we've been continuously implementing in the low volatility portfolio for some time, for a while now. And which is, we have a screener that is specifically looking for stocks in each of the large, mid, and small components of the portfolio that have lower than average volatility in their both in their price and in the amount of revenue that they generate. So looking for stable companies that have less than average volatility. The other thing that was a key element to the portfolio that we adjusted a number of years ago was we wanted to make sure that we had a good portion of the top parts of each index to reduce the volatility of the tracking error that we have in the portfolio, specifically on the downside. When you don't, if you eliminate a huge percentage of those companies at the top of every index, which we know end up making most of that index performance for a year, it can be challenging when you have a significant underweight to those positions. So we have a key part of the portfolio is keeping those top stocks from the major market cap weighted indices in the portfolio, and then trying to optimize around them to again create the most upside as possible, while again limiting the downside, with this being a low volatility portfolio. So we have really four elements, four goals when we go into the portfolio after we build our investment universe. And that is, one, to have the best potential for return. Two, to make sure that we keep a good portion of the top market cap in the portfolio. Three, to minimize the portfolio risk, specifically using value at risk, and the goal being to minimize the amount of value at risk that each of the positions are contributing to the risk of the portfolio. And then to also make sure that we have an element of minimizing the price that we are paying for each of the stocks, specifically using price to earnings ratio, making sure that we are trying to eliminate too big of purchases inside of stocks that have really high price relative to their earnings. So what we did in this rebalance was basically we ran that our screener to build our universe, looking at the potentially new holdings that could be included in the portfolio, the existing holdings that are currently in the portfolio, and we ran our schema, which balances those four elements that I just talked about, and essentially came up with an adjusted portfolio. Ultimately, at the top of the portfolio, because we are trying to keep and make sure we hold the major parts of the index as the top part of the portfolio, and we're not significantly going to be eliminating those holdings from the portfolio at any given time. The top turnover is not huge, but some of the less holdings in the portfolio have changed, and we've actually expanded the number of holdings that are contained inside the portfolio by a little bit, in a goal to basically reduce the amount of total turnover that's accomplished inside the portfolio, and make sure that we still have enough diversification inside of each of our large, mid, and small sleeves. So that is in a nutshell what we've done, both on, I guess, all three sleeves: large cap, mid cap, and small cap. And then for those of you that use the allocation for the portfolio, where we're controlling, where Revisor is controlling the large cap, mid cap, small cap, and international exposure, we wanted to make sure we rebalance back the target there as well. And that target has not changed. So we still have 35% in large cap, 20% in small cap, 15% in mid cap, and then 30% in international, with a slight overweight to emerging markets. And that will be something we're gathering back into line as well during this rebalance for those that are using the full allocation of large, mid, and small with international exposure as well. But that in a nutshell is what we did.
Great. And then what would be maybe we were talking about a couple of the, or maybe it was just one specific position. Any key highlights on? I know there was a lot of changes, but just maybe the big name. What would be a little concise overview there of the big?
For sure, the biggest name you'll see that's a new element to the portfolio is Eli Lilly, ticker symbol LLY. That in the large cap portfolio is the largest percentage of the portfolio, first of all. And Eli Lilly was not in the portfolio as of the last targeted rebalance and reconstitution, and it is now at 8% of the portfolio. That's probably the biggest change that you'll notice inside of the portfolio for this December.
Got it. Eli Lilly. All right. Sounds good. Well, that I mean, for me personally, as an advisor, that gives me a really nice I know we had talked about this behind the scenes a little bit as well. So this is my second time hearing the explanation. But I know for me as an advisor working with clients, that really gives me what I might have to watch the recording another time or so to be able to eloquently describe the give the overview to the client base. But I felt like that was a really good, really nice illustration and overview of what took place. And anything else that you'd want to add that you think would be important for advisors to know about?
Yeah, Nick, maybe highlighting when you've been implementing the trades or working on implementing the trades with Jacob, is there anything that's been interesting to you as you've implemented the trades as far as the positions that are being sold and being bought back? Have you seen anything interesting there?
Yeah, I mean, you see a lot of obviously what you were talking about reflected as you should. Um, a lot of bigger names being sold down just to get them back down to target, that type of thing. Um, Up to this point, we've only done tax deferred, tax exempt accounts, just because of the taxable implications. We're waiting to do those with tax loss harvesting, keeping the goal of keeping gains low and getting close to target as possible. Those are coming later, but especially with those accounts that we did early on, yeah, bigger names definitely sold off to get us closer to target, especially those ones that ran this year. Um, Good amount of trades in general. This is just a pretty, uh, there's a lot of positions in
General
this.
overview. Yeah,
Yeah. So
I
awesome.
think
there was a good amount of trades.
I think that maybe is an important point to keep in mind here is that the portfolio, the clients are going to see sells across some major key parts of the portfolio, some very well-known names like Meta and Tesla, Amazon, Microsoft, Google, that kind of stuff. And it's key to note that these positions are not being eliminated from the portfolio. They're still a major part of the portfolio. Again, the key was they'd done so well previously, the previous 11 to 12 months, that we're trying to make sure we get them back in line so that we don't have a significant overweight to these companies in the portfolio. So that not they're being sold, and you might even see some larger trades in those positions as they get sold back down to target, especially when you look at companies that are up, close to 100% for the year. But they're not being eliminated from the portfolio, just being trimmed back to where we feel comfortable with them.
No, that's perfect, and that is really important. And that, I mean, that's what we do, right? Real simple stuff. I'm a simpleton. Sell high, buy low. Show me the alpha, baby, right? I mean, that's again, no, obviously we don't have a crystal ball. We can't guarantee that every adjustment we made, ends up with a positive result, but that's a key component to this factor-based investing world. As an advisor, you're paying a very low expense ratio for potential alpha, and it's it, at the end of the day, some of those real simple concepts are built into the portfolio management process, and really just trying to take advantage of some of those really, really simple concepts like selling high and buying low, and doing it with a systematic approach. And you know, it's so far so good. We've had great results in this strategy thus far in 2023, and that's the plan moving forward. So, thanks, Nick and Ethan. Really appreciate everything. And unless you have any other parting words, we can wrap it up for today.
That's all I have.
All you've got. All right, awesome. Well, thanks again, and have a good rest of your day.
Thanks, Landon.
Thank you.
Bye bye.